Good evening, friends of NCNW. Welcome to another edition in our Millennial Entrepreneur Series. We're so glad you could join us tonight. If you're in the Washington, D.C. area, you're probably grateful that the rain that we've experienced for the past couple of days has let up a little. Spoke to some friends yesterday from Northern California. Of course, they were delighted to see the rain, give them a little relief from the hot, dry weather out on the West Coast. But tonight we've got a very special program lined up for you, as we do every second Tuesday night, second Thursday night. And we've got a special guest we'll introduce. But before we get into that, we want to thank those of you who attended our convention. 1,900 of you attended the 59th annual convention of the National Council of Negro Women. We had nearly 100 speakers, great participation, and we're thankful that you were part of it and look forward to additional events. While we're talking about calendar, mark your calendar for February 21st, where we will celebrate the 85th anniversary of the National Council of Negro Women with a symposium on the big ideas: inclusion, diversity, equity, and accessibility. We invite you to join us virtually, of course. We're still not meeting at 633 Pennsylvania Avenue quite yet. Looks like it's going to be a while. But please join us on February 21st and visit our website, www.ncnw.org, to keep up with what the council is doing. At this point, Mr. Kevin Johannes is with us, our esteemed communications director, who will give us some tips on how to use this GoToWebinar platform. Mr. Johannes.
Good evening. Thank you for letting me speak here. I would like to point out to everybody, there is a section at the bottom called questions. If you have a question I think we'll do them at the end. Please understand that we'll be reading the questions back, so your brevity is appreciated. Also, if you have any other problems with the program, we provided you with a PDF of webinar information so you can know how to use this tool just a little better this time and next time. You can download that if you like. If you have a question, you'd like to raise your hand, you can see that on where your name is. You just tap that and we will try to get to you. After we have this program, it is being recorded and it will be displayed on our website at ncnw.org.
Thank you, Mr. Johannes. And now I want to introduce our special guest for a topic that is very intriguing. So many of you signed up for this webinar tonight, so we know that you're interested in knowing more about the equity markets and how they work. And we have someone who is very able to share some insights and give us what we need to know to become good, sound investors. Ricky O'Reilly Jones is our guest this evening. She has spent, despite her youthful appearance, nearly a decade informing public policy at the U.S. Agency for International Development, and more recently with the U.S. Small Business Administration, where she serves as an investment officer in the SBIC private equity program. And if you don't know what that is, like I'm not altogether sure I know what it is, we'll find out before the evening is over. She is also a consultant to Beta Capital Group, LLC, a financial services firm dedicated to increasing financial literacy among women and people of color. She serves as a financial educator with Beta and provides weekly editorial trainings through a program called Finance Friday and another called Money Making Monday. I thought it was Money Making Money, but it's Money Making Monday with Zion Church's Extreme Kids Studio, where students are taught the basic principles of tithing, saving, and investment. She has time in her busy schedule to volunteer as treasurer for the NAACP Washington, D.C. branch and earned a master's of business administration from the University of Maryland. Please join me in welcoming Ms. Ricky O'Reilly Jones. Good evening, Ms. Jones. How are you?
I'm wonderful. I'm super stoked to be here. Thank you for having me.
It's our pleasure.
Okay. Many thanks to everyone for joining tonight. I have some fun stuff in store, but particularly just talking on a topic that is near to dear to me. And during this crazy time, we're in somewhat of an administration change or transfer of power. But, you know, one thing we know is that the market does not like uncertainty. and it reacts accordingly. But right now, and we'll see a little bit of it later, the market is doing really well. So just a little bit of housekeeping. So I am a fiduciary. So I'm neither trying to sell any investment product, nor am I in a contract with any brokerage. So I'm a public servant, as included in the introduction. I work at the Small Business Administration, and so I have a responsibility to the American public to make sure that I always have their best interests at heart. And what I always like to say, we started Beta Capital Group on the premise and desire to help people that look like us, right? And particularly to help assist the non-traditional investor. And I believe that we're all non-traditional investors until we start investing. So super happy to be here. Also, as a disclaimer, you always got to say this, stock market performance, past performance is no guarantee of future performance, okay? So just because the market did great today doesn't mean it will tomorrow. So I really want this training to be not just learning objectives, right? I don't want these to just be words on the screen. My hope is that you'll leave this session with something tangible and feeling empowered, because investing is really an investment in yourself, right? So I'll be looking at some of these objectives is probably, or perhaps help to inform your decision to join the training tonight. I want you to develop some strategies to inform your investment decisions, right? So what does that mean? It's like, it's going to be how you approach your investment decisions. Gain an understanding of the different types of investments and discuss some tips and tricks to avoid some mistakes that I have made and learn how to make an investment. But before we do that, I'm going to start a little activity, scavenger hunt. I know we've been talked at in the age of COVID, so I want to get you all involved and I want to hear from you. So the first two people to find something blue, something new, and something important to you, so that's 3 things, not just one, will be the recipients of a free 30-minute consultation with Beta Capital Group to discuss your financial goals. So 60 seconds. Does somebody have a timer? I do. And I guess you can raise your hand when you have your 3. And there's a method to my madness, so I hope to hear from you. I feel like we have 45 seconds left. $20 seconds. Do we have anybody?
Yes, we do. Miss Polly Ann Neely has her hand up. I'm trying to connect her.
Awesome. Thanks for playing along, everyone. I'm sorry, but I think it's worth mentioning.
Sheila Wilson has her hand up, and Shelby Patterson has her hand up, and W. Casey. We have 4 people.
So who were the first 2?
Polly Ann Neely and Miss Sheila Wilson.
All right, let's do it. So Miss Polly, so something blue, something new, and something important to you.
You can go ahead and type it in the question answer. I can see it, Miss Neely, and I will speak it.
Okay. I'm so excited to hear what you all say.
Ms. Sheila Wilson, do the same thing, please. Trying to. How are we doing? Waiting for answers.
Well, while we're waiting, I will show, since I can show my camera, here's my something blue.
I
It's
love
just
it.
a notebook. I like these little empty notebooks. I write notes in them to myself and to others and to posterity. So this is my something blue. My something new is this little speaker, which makes my iPad sound like I might be in a nightclub someplace. So that's kind of
Okay.
cool. And something precious is something important to you. As you can see these young people in these photographs behind me, that's what's important to me.
Miss Neely has answered. She has a blue thumb drive, her new Veterans Women's Initiative pin, and what's important to her is she has water. It's all about healthy living.
Awesome. Make sure I get your information. Thank you. And a second person?
Miss Sheila Wilson has a blue shirt, a
Okay.
new dinette set, and family is important to her.
Wonderful. Thank you so much for participating. Why did I start off with this activity? Well, it's important for us to understand and be able to properly articulate our why, right? It makes it much harder for you to stay invested in the stock market or in your education if you don't really give a name to your motivation for diversifying your portfolio, right? So here's my something new. I recently diversified my portfolio just because it's that time of the year. And this is my family. It's my mom, my dad, my nephews, my sister, my son, my boo. And these are important to me. These are my why and my Bible, because I'm nothing without it. So now that we got that out of the way, every investing is a journey, right? So this is our roadmap, and we're starting off with strategy. So we have some of these right here. We have what I perceive to be some impediments to people investing. So they don't know where to start. They can't understand some of the language, right? I feel like some people in finance speak a different language. I don't want to lose money. I don't have time. Does it sound familiar? I hope not, because you are all here right now. So you're interested in learning. So maybe this is you. Maybe you want to know what stocks you should invest in, how you should decide when to invest your money. Can you invest your money? How much money do you need to get started? These are all good questions, and these are questions that you should be asking, right? So, and thinking in terms of strategy, I hope everyone has a pen and paper, because like I said, I want you to start drafting your plan right now, today. We already talked about our why, our motivation for investing. Write it down, because when we don't write it down, you're more susceptible to just waning off and doing something else, right? Not staying committed to your goals. So there are 4 steps to creating your plan. Set your goals, being realistic, being specific, making sure that you have a date, because if you don't have a date, there's no accountability. Calculate how much you're going to need. How much money do you think you need to, what are you planning for? What's your end goal? Is it retirement? Is it something short-term? Is it long-term? And that really goes into informing your investment strategy, is really knowing the length, the timing. So for me, I have 2 separate goals, right? I have a short-term and I have a long-term. And so I have different paths for both. And I imagine that you all will as well. And even having an emergency fund, like how do you save for that? How do you use an investment vehicle to help you realize that goal? There's so many different lanes that you need to consider. And that's why it's really, really important to have a plan. Because if you just start off in one direction, you're going to miss something, right? And this last bit here, this is when you develop a policy statement, it's really to help you be accountable to yourself. But if you choose to use a financial advisor or a brokerage firm, this is what guides their decision. So if you say you only want to invest in GE, I'm so biased about GE, y'all will hear about it later. So if you say you only want to invest in GE, then they have to stick to that. They can't invest in anything else, right? So that's why that is important. I wonder if I can move this. Sweet. Okay, so that was quick and easy, right? So now we're going to go on to some basic facts. Before you start investing, there's just some things that you just absolutely have to know. And the first is inflation. I really feel like, and we could talk about inflation for an hour, and it could certainly be its own topic just because there are so many different complexities when talking about it, but I'm gonna try to make this as simple as possible. So inflation is defined as a sustained increase in the price of goods and services. So what that basically it indicates is a decrease in the purchasing power of a nation's currency. So right here you see that since 1913, the average inflation rate in the US has been 3.24%, which is actually, that doesn't sound too bad, but until we realize that that number, the rates, they'll double every 20 years, right? And I've included this because a negative 0.09% since 2019 means that we're not operating in an inflationary environment, right? For investors, this is pretty good news because stocks overall, they do seem to be more volatile during high inflationary periods, right? We don't want volatility when we're investing in the stock market. So higher inflation means higher cost of living and therefore lower purchasing power, right? So when inflation goes up, people earn less money, so they spend less. But when it's down, when it's negative 0%, and since 2019, what are we doing? We're spending all our money at Walmart, we're spending all of our money at Amazon, and this is where we are right now. And I'm so guilty of this. But why is this really important? Why am I boring you talking about inflation? When you look at the value of the dollar over time, it's incredible, right? Inflation on the value of the dollar over time is important for investors to consider. So when we look at this, we have $100 in 1914 is worth $2,630 today, right? So you see here, it's scaled all the way up to $2,630. So remember when I said the market, that 3.24%, it doesn't sound bad, but when you hear that it doubles or 20%, that's a lot, right? And so this is an average inflation rate of 3.24% and a cumulative inflation rate of 2.6. So why do we need to be cognizant of this? So we invest to beat inflation. So if you don't invest and grow your money, you're going to lose money over time. So this is a really important lesson. So if you have your pen and paper out, you should have your pen and paper out. You should write this down. Especially in considering, when most people, they think about losing their money in the stock market, they imagine like some type of event happened, right? Or somebody advised you on the wrong stock. But the truth is, ordinary people lose money every day because of inflation. So a good example is like a savings account. If your savings account, right now wouldn't be such a great analogy or comparison because the market, the inflation rate is super low. But if we were in that 3.24%, that's the average. But if it were that since 2020, or if it were 3% since 2019, then like if you had your money inside of a savings account and your savings account was only giving you a yield of like 0.1%, you'd be losing money, right? Because you're not beating inflation. So in the market, the average annual rate of return, so that's how much in the market performs, right? The average stock market return is historically 10% annually before inflation. So over the 100+ years that the market has existed, this is the average number. That sounds good, right? So I've invested my money, that's 10 cents on the dollar. I'm getting that at the end of the year. No, that's just the average, right? I'll show you some examples of where some investments I have. So when you adjust this 10% for inflation, it's actually 7 to 8%. And so this is just another example. So you have the 10% average stock return minus the average inflation is 2% growth. So you had a 2% growth. When you minus that by inflation, That's a negative 1% return. This is why inflation is so important, because you think you're making money in the stock market, but actually you just made some money, but you're actually losing in the long run because of just how inflation works. And don't even start talking about like the taxes that you'll have to pay when you try to cash out some of those investments. If you invest in the wrong type of vehicle, you're losing even more money, and it's not readily, you don't readily see it. So this is why this is important. So investment types. This is when it gets interesting. So we have bonds, mutual funds, index funds, ETFs, exchange traded funds, options, stocks. So bonds, plain and simple, right? They're loans you make to a company or a government. They're usually the lowest yielding, and yielding means that you get money back, so you're making money. They're the lowest yielding type of investment there is. As an aside, so when COVID, when there was speculation that people were going to have to stay home during COVID, I immediately moved all of my money into the G fund. So it was into the bond account. So in the government, we have different funds that we can invest our retirement account into. And so I moved everything in the G fund. And so I avoided that big dip that a lot of people experienced. But of course, the market, there's so many ebbs and flows. So you just never know how it's going to go. But mutual funds, I like to call this the jambalaya of securities. And of course, securities are tradable financial assets. Why is it a jambalaya? Because they have all kinds of stuff in there, right? It's just a combination of, just like index funds, it's just a whole bunch of different type of investments that they put into a fund, and it's managed by some type of brokerage. So a brokerage being E-Trade, Fidelity, whatever your heart's desire, one of those. And then ETFs. So ETFs are a collection of tens, hundreds, sometimes thousands of stocks and bonds in a single fund. So these all sound a lot alike, right? Well, they pretty much are. So mutual funds, index funds, ETFs. The only difference between them, really, these three. So the only difference, mutual funds and index funds are pretty much the same thing. ETFs and mutual funds and index funds is timing. So for mutual funds and index funds, they are priced once at the end of market close every day. So if it's trading at $150, for example, so let's say a mutual fund was trading at $150 today. It's probably a lot higher, but $150 all day tomorrow, it's going to be $150. It's not going to go up and down like it would for an ETF, right? So if I wanted to trade in an ETF, it could start off at $5, but it could go all the way up to $100. So if the advantage, or why people would invest in an ETF, an exchange traded fund, is because they just want to have more control over the timing of their investment. Options. Option is a contract to buy or sell a stock price by a set date. As a new investor, I do not recommend you to invest in any types of options, because this is one of those tricks, because that sounds pretty straightforward, right? But there are so many different complexities and research and just craziness that people involve themselves with when investing in options. So while it can be totally profitable, and it is profitable, you could also lose a lot of money. So I would avoid that one as a new investor. And then stocks. They're equity investments in a specific company. So when you purchase a stock, you're buying a share, which is just a small piece of that company's earnings and assets, right? So if so all those shoes that I have in my house, sell for Nike, right? Every time that I want to buy into Nike, I'm giving them, or I'm buying shares, right? So I'm helping that company continue to grow. So look at the company as a fund, right? And they trade every day. So if they have some upside, that means that they've increased in value, then I have some upside because I'm an investor in their business just by the mere fact that I bought some of their stocks. So is it time to do questions? Anybody have any questions? I've been talking a lot.
I have a question, and
Yes,
I'm
ma'am.
sure our audience will too. But you mentioned a term and you talked about volatility. And that's a term that we hear often. Could you explain a little bit more about what you mean when you say volatility?
Absolutely. So that's what the beta is, right? It's a measurement of the volatility in the market. That's what beta stands for. But more specifically, volatility is the ebbs and flows in the market. So you'll have some stocks, typically they're going to be your tech stocks, right? They can be super profitable, and they're the growth stocks. So they'll be super profitable. They're also called small cap, but they're very risky. And volatility has everything to do with risk. GE, we're going to get to it. We're about to get to it. So GE has long been, or not, maybe over the past 5 years or so, there's been a lot of volatility in GE because it maybe was $35 and now it tanked to 8%. I mean, $8. And that's kind of crazy, right? So if I was a $35 investor and I experienced that volatility in GE, I probably wouldn't feel the way I feel about them right now. But these are the risks that you have when you're in the market. And thank you for that question. Is there anyone else?
Versus here Morningstar Fund.
I'm sorry.
Are you familiar with the tortoise versus hare Morningstar Fund?
I'm not. That's a tradable? It's in the open market?
I'm assuming. What are your thoughts on Stockpile, Robinhood, and is Forex hard?
So I don't invest in Forex. So like I said, the example that inflation, you could have a whole training on that. Forex is a whole different type of an investment vehicle that I don't trade in. But I love your question about the Robinhood versus the other brokerages accounts. And so we're actually about to get into that, right? So I will share that right now. Do we have any other questions before I do that though?
We can hold on the questions. You can go ahead.
Okay, sweet. So tips and tricks, right? So hands-on learning, because we're about to walk through some of my investments that I have in Robinhood. But so here, this is something to keep in mind. I would take a screenshot of this because this is like really good stuff. And I didn't make up the P thing. There are some brothers actually at the University of Maryland. They went to the University of Maryland and they had this 3P philosophy. So I've just added some additional P's. I thought it was brilliant. But when you're thinking about an investment, think about what you're buying. What is the product, right? How popular is it? We're going to talk about this in a second when we go through some of the Robinhood. And who are the people? Who are the people that are managing this thing? Like, do you trust them? Do you trust them with your money? Like, how much does it cost? And portfolio, how does this investment help to amplify or add to your existing portfolio, your investments that you already have? Is it going to hurt you in the long run? Does it make sense for you to have it? These are all the things you need to consider. And person and people, right, they're kind of the same thing. Person leading it, and then people that are actually buying it. So we'll look at the mass right now, because I keep talking about it. Sorry, y'all. Okay. So this isn't a Robinhood training, but I thought that this would be helpful. So just in terms, so this is one of the accounts that I invest for fun. I have an E-Trade account, and I also have my retirement account, and I also have life insurance. So that's what my portfolio consists of. So here you see, for the life of my investments, I'm up 1%. That's not great performance. The market has been crazy. And I actually made some exits recently on some OPTT. I don't know if you know about it, but I made like $700 on a penny stock. And that's not always, right? It just happened to be that a win for me. And so I say that to say that when you cash out an investment, it lowers your overall performance. So these are some of the investments, well, these are my investments, right? So just playing around, clicking on GE because I always talk about them, right? So today they lost some money, it's fine. 5 years, see, if you look here, December of 2015, the value of the stock was $30.28. This is always important when I look at it. Also important are the people. Who is the CEO of this firm? What has he done? Like, what are his credentials? All of that matters. Also, what's the average volume? This is the people, right? That's the person. This is the people. How much volume does this stock get on a daily basis? If this 142 million, that's a lot of people investing in this stock every day. So that's a clue that this is going to be one of those investments that potentially will do well. But then there's also some lower trading stocks that we can go look at in this right now. Sorry, y'all, you know the Mac acts crazy sometimes. So that has less volume. Where's the most penny stocks? Maybe this one. So this is a funny one. So this is medical cannabis. This is Canadian based. But what's really interesting about this, why I made this investment, I told you that the market doesn't like operating in uncertainty. But every time something happens, there's so much like intrinsic and extrinsic value going on. Like the market moves on the whim. So there was, it was during one of the VP debates, right? And they were talking about this. So the market, like it went crazy. But then also I read the 10K. I read the possibility of future performance, and with the laws being the restrictions, that's what I want to say. The restrictions are being lifted. So there's going to be a bigger space and opportunity for this type of stock. It's not doing great today, but that doesn't mean that it won't. And so I also want to talk about this. I never ever pay attention to this, right? And I never ever think that it's right, to be honest. Usually when it's like buy, it's usually like, no, you should not buy. But something else I wanted to say, usually when a stock is hot, right? So let me go back. When a stock is hot, when it's green, like that's probably not your best time to buy it. So this is red, so this is on sale. So this is when I would just buy even more of the stock, because this makes sense to me. I'm like, okay, cool, I've already bought into it. It's on sale. I've already thought about my P's. I've done my research on the 10Ks, the performance, reasons why I think that it's gonna do better. And so you think about like the future. You listen to the news and see what's going on. There's another one I just want to talk to you all about. So this is the OPTT one I was talking about. It's at my, let me see, my average investment was like 70 cents. I don't know if you can see it on here though. I guess it doesn't matter. But I think you all get the hang of this, right? Okay. So going back, just some final Q&A. We can run through some more examples if you all want to, but I really want to answer some of your questions that you may have. And also just remember that investing is an investment in you. It's an alignment of your priorities. It's considering your family and what's important, and weighing your short-term goals versus your long-term goals, understanding that you also need to account for emergencies. And listen, retirement is a journey. It's not a destination. And I don't want you to think that retirement is like when you're 65 or 70 years old. You can be retired at 40 years old if you plan accordingly, properly, right? And then be kind to yourself. Give yourself some grace. Like maybe you didn't start soon enough. Maybe you have a son that's about to graduate and you wish you would have done more. Give yourself some grace. You're exactly where you're supposed to be. And if you have any questions, don't ever hesitate to reach out. This is me. These are all of the places that you can reach us. betacapitalgroup.com. We're on IG. We're on LinkedIn. And there's my email address. Any questions?
Yes, we have some questions.
Okay.
What is your opinion on online investment like apps like Acorn?
I think it's great for it. It's again, right? It goes down to your strategy, right? What are you trying to accomplish by investing in Acorn? Is it because you want to develop a better savings mechanism? That's effectively what it does. Or could you better use those resources to create, maybe buy into an IRA, buy into a Roth that's outside of your employer? Because Roth accounts, they're tax vehicles. So you could put mutual fund investments, you could put ETFs, you could put bonds into the Roth account. But what's really cool about the Roth account is it's after tax. So once your money hits the bank account, you've already paid taxes on it. So you invest in the mutual funds, the bonds, the stocks, and your investments grow tax-free. So what we know about taxes is they've never gone down. We don't know how much taxes are going to be when we retire, when we're eligible to make the distributions, or if you have like an eligible event, like if you're buying a house or if you're paying for school, you can take the money, the gains out of the Roth IRA. But what I'm trying to say is, for me, investing into a Roth IRA is the biggest bang for my buck outside of my retirement account that I have through my employer, because my money grows tax-free. And whenever I decide to retire, I can take it out without that penalty of having to pay taxes, like I would on an Acorn or an Robinhood or any of those other devices.
Okay. How do you start investing for people who have absolutely no experience? Can a person just open an account like E-Trades? Is there a minimum dollar amount?
No minimum dollar amount. So I feel like I skipped over something. I wanted to show you all this. So NerdWallet is really my bag, y'all. Like, I love NerdWallet so much. They put things in layman terms. You can figure out. So look, this is the brokerage, right? So to answer your question, you go through, you just pick a brokerage. You figure out, do you want a robo-advisor? So that's somebody that manages your account for you. Do you want a human managing your account for you, or do you want to do it yourself? And then you go to the brokerage, you tell them what you want to do, and then they hook you up, they set you up, and then you go from there. But what I'd say, to answer your question more specifically, no, you don't have to have a certain amount of money to start investing. I would want to know how much money, what you're trying to invest in, though. Like, are you trying to invest in Robinhood? Are you trying to open up a mutual fund? So let me back up. Some of them have some minimums to invest, right? So 500, 1,000. But for an investor that wants to put their money somewhere, there's going to be a place for you to put your money somewhere. Okay. I hope I answered that. So I also want to say, so if you're trying to, like, every pay period, you take $20 out and you want to invest in an individual stock, like, which is Robinhood. You can buy into fractional shares. That's why I like Robinhood for new traders, is because it's super intuitive. It's easy to navigate. It's like, it's made by millennials for millennials, right? Whereas like the E-Trades and the Fidelities, they're less intuitive, but they allow you to do a lot of different things, right? Like my E-Trade account, I can make the same investments that I make in Robinhood through my IRA. I can make the same investments, but guess what I'm not getting in my E-Trade account? I'm not getting taxed because I put it into a Roth IRA. I'm not making my distributions, the gains that I have on that whenever I have either a taxable distribution event, like buying a house or paying for school, or when I reach retirement, like that money will grow tax-free. But in Robinhood, when I took some money out, I was taxed like 30%. So you gotta figure out what your strategy is. Really good. Gets back to that.
Which leads to our next question. What are the pros and cons of managing your own investments versus retaining a broker or a brokerage house?
So having a brokerage do it for you, they're skilled professionals, right? They're licensed to do this. They know what they're doing. They can give you advice that you perhaps don't have yourself. Those are some of the things, and it's cheaper it's not always cheaper to do it yourself, right? But you have to pay a brokerage, a fee, right? And they're not as expensive now as they used to be, like 10, 20 years ago. It was very expensive to hire a brokerage to do your investments for you. Not very, but more expensive than it is today. It just really comes down to your strategy, right? How much control do you want over your portfolio? And portfolio, of course, is all of your investments. So like I said, I have my retirement account through my employer. I have the fund stock that I play with on Robinhood. I have my E-Trade that has more serious accounts. And then I have my life insurance. So that's my entire portfolio for now, right? And I manage it myself. So I always say a financial advisor without a financial advisor is making a really bad decision. It's super irresponsible. So I always consult people, right? And if you have an employer, this is like an aside, or if your employer offers it, the EAP, an employer assistance program, they offer, at least through the government, or some companies have different programs, they just call it something else, but they typically offer the same types of things. So through the EAP, through the government, they give you 2 30-minute sessions with a financial advisor every month. So for those that have it or don't, you should have something. You should look into it to see what's available to you to consult. I hope I answered your question. I think that again, your strategy is really important. How much ownership you want to have, how much risk are you willing to take?
Okay, what is your assessment, or is it wise to invest in Bitcoin?
So none of this is financial advice, okay, y'all? This is not financial advice. These are all my opinions. Everything that you just saw is my opinion, right? Not recommendation for you to do one thing or the other. Bitcoin, there's so many unknowns, right? So all of the conventional wisdom that we have, that we set, like some of the things that I presented you today, like the P's, the product, the people, we don't know any of that because it's so new. Do I think that there's potential? Sure, I definitely think there's potential. It strikes me as like a Tesla investment. And I had some screenshots back in 2018 when I was investing in Tesla, and it blew up, right? I got out too early though. As soon as it shot up one time, I took all my money out. But it went even higher. If you believe in the people behind it, and you see that the people, like the CEOs, they're actually investing in it themselves, then that's something that you could potentially support. But it's so many unknowns right now. But that's not to say that it won't be something in the future. I don't invest in it right now, just because it doesn't really fit in my portfolio or what I'm trying to accomplish right now.
Okay, this individual is considering a career in finance. Can you talk about what you do throughout the day and what you're passionate about?
Oh, I'm passionate about people. That's what public service is all about. To answer that, my day job, so in private equity, today was a crazy day too. Private equity is obviously, it's not in the stock market. You have fund managers that invest in small businesses, And so they're off market. So typically the businesses that they invest in are higher risk. And so they can't usually get funding from like your traditional sources of funding, like a bank, right? So they go to these fund managers with their hedge funds, their investment managers, and they typically, it's sometimes, so through the program that I work in, the small business investment companies, sometimes this will be the first type of sophisticated capital that they will receive. So that's the opportunity that the government presents to these small businesses. So other private equity funds out there in the world that aren't SBICs, we call it upmarket. So that means they're looking for larger businesses that need money that they can't get from a bank. And so what SBA does through the SBIC program, we find those small businesses, and by small, they're not really that small, right? So these businesses they have to like generate $1 to $100 million a year. But in terms of just qualifying for this, it's a sophisticated capital, right? So if you're interested in finance, you'll learn all of this. I don't want to bore everyone about it, but it's a really cool program. So, and we offer 2-to-1 leverage. So for every dollar that fund raises, the government gives it 2. And so up to $350 million on a family of funds. So what I do, and 4 other people in my unit, we review all of these different applicants that come in, and we determine we make a recommendation to determine whether or not this applicant, we call them applicants, these funds are suitable to receive this leverage. So that leverage, that's that 2-to-1 match. So let's say a fund came in with $100 million, proposing $100 million fund, we'll match them. And so they'll have a $300 million fund to go invest in small businesses. I could go on and on about this, but I don't want to give you what you care about.
They asked if you would put your information back up on the screen. And I do not know. Are there any tools available to help you decide when to purchase stock and what to do and where to learn about a company?
So yeah, so you can certainly learn about a company within whatever your investment brokerage is. So like E-Trade, they have, so that's why I said a 10K. So that provides all of the financial information on any business that is trading in the open market. And so you read that, you see their financial plan, you see their past performance, you see things on their people, right? So I always consult that to see what's going on. Like, is this managed by some good people? How many stock splits have they done in the past? Like, stock splits, they're typically not a cool thing, right? That means that and there are different types of stock splits too, so I don't want to confuse you. But typically it means that the business needs more cash on hand, so they split their stock to kind of get more people to buy in. But the 10Ks list all of that information. And really, so there's so much information, right? I like to say that nobody knows everything. There's no like right or wrong way to do this. But what we do is look at the people that have been highly successful in this field, and even they will admit, like Warren Buffett, he'll say like, I don't waste time like going through all that stuff that I just said. He's a businessman, so he has a sense for like good business, and he has the equity, the capital to make the investment. And he says that sometimes it works for me and sometimes it doesn't, and that's really the nature of the stock market. But remember, year over year, the stock market generates a 10% return average, right? And then after inflation, it's at 7 to 8%. So while there's some down years, or it tends to balance itself out. You just have to stay with it, and don't know your risk level. Be willing to lose some money so that you can win some money.
What is a 10K?
It's that financial document that describes all the business information.
Okay. How can one invest in private equity?
I know, right? You have to know a fund manager, or you can raise capital yourself. So right now, me and my girlfriends were starting to create an equity group. It's not sophisticated by any means, but it's really just having the capital, pooling it, and there's a self-certified program to be institutional investors, and I'm about to say you only. I think that you need to make $200,000 a year or have $1 million of assets, and so it's not hard to get that designation. It may be more of a challenge to try to find like a private equity firm that you can invest in, because it's really that the nature of private equity is really about people and relationships. And if they don't know you, there's more scrutiny to like where your money is coming from, because they rely on your money to go into their fund. And so the fund, it's a 5-year investment period. So the fund, once they raise all their money, they can ask you subscribe to pay money each quarter or whenever that fund feels like it. They call it capital calls. So if you don't have that money, then like that's bad news for them. So yeah, I'm still trying to figure that out.
All right. What is the difference between a REIT and a REIG?
A REIT, they're both real estate investments. I'm not gonna lie to you, I don't know offhand. Like REITs, they're great. Like real estate is a great investment. It's a great hedge against like the volatility of a stock, like for a growth stock, right? Because we know that year over year, real estate does well, minus the housing crisis, but you saw how they rebounded, and that's just really the nature of the market. Again, I don't know what the G stands for. I'm sorry. I'm gonna write that one down.
Okay. What do you think about focusing on companies that have consistent dividend payouts instead of growth stocks?
I think that's so there are different philosophies, right? So there's always, depends on your strategy, right? So some people say that when you're first getting into the market, it should be a high concentration on a sophisticated stock. And that sophisticated, I can't talk. That sophisticated stock is usually like a blue chip. It's going to be one of those dividend generating types of stocks. So you have high concentration there, so you're able to get dividends so that you can reinvest your dividends, right? So that's how you're maximizing your money, you're compounding, you're doing all the things that people in finance say is a great thing. So that once you're getting started out, that's one philosophy. Another philosophy is it's risky, right? It's risky to put all of your money, all of your eggs in one basket. So it's really what you're most comfortable with. I know I keep saying that, and I'm sorry. I hope it's not. I hope it's helpful what I'm saying. What would I do? I think that if it were a Tesla, right? And Tesla's not generating dividends, but if I believed in its capability, because eventually it will. Let me give a better example. Like Coca-Cola, right? I think they're one of the highest dividend bearing types of stocks you can invest in. If I put my high concentration into Coca-Cola, I don't know how much money they're going to make in the future. So I don't know how big of a return I'll get. But if I have enough money, the more money that you invest, the more the money that you can get back. So it has to be worth my while investing in that way. And so after you've made enough money investing that way and getting the dividend bearing types of stock, then you can go and do those other things. And that's what people call hedging, because you had that concentration, you made money, and then you're hedging by playing in these other areas. And I want to also, like, I don't know if I mentioned this, but if you aren't maximizing your employer's, if your employer has a match and you're not maximizing it, you probably shouldn't even be thinking about investing in like these other stocks, right? Because you're going to get 9 times out of 10 your biggest bang for your buck by just investing in your employer-sponsored program. That's not always the case, right? It depends on how the funds are or what the options are for investments, but it's so much more riskier. It's riskier, sorry, to go out and dibble dabble like this when you have the opportunity to invest through like the traditional mutual index funds, which tend to be safer and tend to invest in like those common stocks, in those dividend bearing stocks, so that you can get your money, biggest bang for your buck over time. I said a lot, I'm sorry.
It's okay. So which leads to the next question. If you had $50,000, what would you invest in?
Shoot, I would do an analysis, right? I would do an analysis of the market, because timing is everything in the market, right? It's really like, okay, what's happening right now? What do I foresee? As I was watching the news, it was Joe Biden. He was talking about, like, this is a great example, the energy stocks. And the next day, the stocks shot up $3. So if I had a $50,000 investment, times that by 3, I'd have been able to like triple my investment. I'd have got in and got out quick, because I knew I was listening, I was paying attention, and I know that people move on like these like emotions. But I didn't have $50,000 at the time, so I didn't make it. I didn't triple it.
What do you think about penny stocks?
So I said I made money on a penny stock recently. I think that they're really hit or miss, but it's a good way to learn how to invest, right? Make sure that what you're investing in makes sense. Go over your P's. I should probably just put that up so that y'all can see it, because I think this is probably the most important slide of all, right? Think about this. Especially if you're trying to do self-directed investments, or even if you go with a brokerage, because you have to tell them what your values are. You have to let them know. So if the people, the product, if all of that is going well in that penny stock, then I'm buying in. Like, really, I was buying like GE. I was always investing in GE because I knew that they're a sophisticated company, and they've made investments that I believe, this is my opinion, y'all, this isn't investment advice, I believe will be realized, right? They were trading at $30 in 2015. They're at $8, $9 right now. There's opportunity there. And so I look for opportunity. I look for what's happening in the world. Gas is going away, right? Nobody's buying, we're not going to be buying gas cars in the next 20 years. Everything is going to be electric. Everything is going to be sustainable energy. So where should y'all be putting your money right now? Probably not right now, because they might be too high. But if you can find like cheaper ones that make sense for you, and you checked all your P boxes, that's an opportunity. And there are penny stocks in those areas too. Anything else?
Sorry about that. My microphone was off. How does one learn to navigate a brokerage website?
Oh, well, can you be more specific? So are you like saying that you're inside of like an E-Trade and it's kind of crazy in there? Because they're all different, right?
Yeah, they're completely new, and they see just everything moving and don't understand it.
Yeah, so that's why I say Robinhood is more intuitive, because it's easier to navigate. Like E-Trade, Fidelity, I have knowledge of those, so they're not as easy to navigate, like especially if you're a newer investor. But what you can do, and they will hold your hand during this process, you call them, because they want to try to sell you. You don't have to buy the product, but just tell them that, hey, I'm trying to navigate this, and I want to know what you want to invest in, right? Know what you're trying to do. Did you buy into a Roth? Did you get into a mutual fund? Like, what did you do? And tell them that you're trying to track the performance. I want to know how it's performing, so we're going to look for that. Or I want to be able to buy into a different type of security, a different type of investment that is not on the open market, right? So they will be able to respond to those questions without cost.
How did you personally get started investing?
How did I?
Mm-hmm.
I think I always had a knack for it, right? My mother was always doing her finances in front of me or trying to talk stocks to me, and it was never ever interesting to me before. But I became curious at some point, and the rest is history.
Okay. Do you know of any firms focused on impact investments?
Like funds. So there are plenty of funds that are impact investors. I can't name one off the top, but you could, you can Google it. You can find the ticker. You know, the ticker is like Starbucks is SBUX, I think. So just type in impact and the ticker should pop up, or a ticker should pop up.
Is Cash App a penny stock?
No.
Yeah. And that is the last question we have.
Awesome. I hope that this was helpful. I hope that you all wrote things down. I hope that you are feeling empowered. And again, really don't ever hesitate to reach out. It's been great being here. Thank you for having me.
Well, Miss O'Reilly Jones, I do have one final question for you if you up to taking one more.
Let's do it.
You mentioned SBIC several times. I know it's got something to do with small business investment. Could you share a little bit of your SBA experience with us?
Yeah, I've talked a little bit about it. Reggie Lewis wrote a book. So for the question about finance, right? This is a must read, especially if you are a person of color. Reggie Lewis, was said to have been like one of the first Black million. He passed away like at the peak of his career, cancer. But he wrote this book. It's called Why Do White Guys Have All the Fun? And it's really his experience as an investor, as a Harvard lawyer. And he managed one of these businesses. They were called SSBICs, but it's the same program, but they were designated for people of color specifically. This is, I think, in the 90s, when they were trying to get more people of color into the program and more managers. And so he managed one of these investments, and just his story was inspiring. And so I always say the position I'm in now is the best thing that I never asked for or sought for myself. But I've always been a fan of Reggie Lewis. So perhaps it's serendipitous. But the Small Business Investment Companies program, again, is they provide private equity investments. So it's just money that's traded, or not traded, but invested, not in the stock market, it's off market, into a business that typically would not be able to get funding from your traditional sources or institutions like a bank.
Okay. Well, thank you very much. You told us to take notes, and I did take notes and learned a lot tonight. We hope you'll come back and visit with us again soon. And if people want to contact you, give them your website or however you want them to contact you one more time.
Of course, it's right here. It's betacapitalgroup.com, or on IG. I just started this IG page, y'all. Don't judge me. My email is ricky@betacapitalgroup. My IG is Ricky O'Reilly. I have a lot of fun on there, but you should definitely follow the Beta Cap. Y'all don't want to see me. But yeah, it's been great. Thank you so much.
Well, thank you. We're able to bring you these programs 3 times a month because our members generously support it. If you're not a member of the National Council of NCNW, we urge you to reach for NCNW. We specialize in information. We think we're a storehouse of trusted information, whether it's about your health, your career, your relationships, or that all-important topic, politics. Join us again in another week. Next week on the 19th, I think that Deborah Peace Cole Haynes from Dallas, Texas, will talk to us about natural ways to boost your immune system while we're all waiting for the vaccine. Thank you and good night. On behalf of Dr. Janetta Betch Cole and all the NCNW members and board members, we thank you for your participation this evening and look forward to seeing you again soon.